We're going to be talking about fundamental analysis today and how you can use that to invest intelligently into cryptocurrencies. So, starting off here, what actually is fundamental analysis? At a base level, it's not an incredibly difficult concept to understand. It's really just analyzing different core aspects of a potential investment so you can determine what the intrinsic value is. Now, the intrinsic value is just a fancy way of saying what something is actually worth. So as an investor, you're going to be looking at different metrics to determine for yourself, what do you think this asset is actually worth? And the main objective of this is to determine for yourself if you think the asset is overvalued or undervalued. Now, if it's overvalued, you're probably not going to want to make an investment at that current moment in time. If it is undervalued, conversely, an example of this would be the value of the asset is $50 for one of them at the time, and you're looking at it and saying, I think that this asset is worth $100 per one of them. So let's say we're talking about Ethereum. If Ethereum was at $50, you might say, oh, that's really undervalued because I think it's going to be worth $100. So what you could do then is you could try and make an investment, and that assessment of you determining that it's undervalued could come from you doing fundamental analysis. And that's where all of this culminates to help you make informed investment decisions. Now, it's a really important concept, fundamental analysis, because if you use it in conjunction with something like technical analysis, where you're analyzing the price action of something, you can really increase your chances of making an intelligent investment decision. Because by first starting off with fundamental analysis and determining, okay, I think this thing is undervalued, I think it's going to appreciate over time, you can then switch over and put on your technical analysis hat and now say, now I'm going to analyze where the optimal entry point is for this asset. So we're going to be talking about 3 different types of metrics today in this event. And if any of you guys have any questions throughout this presentation, feel free to stop me at any point and ask me. I will ask you periodically if you have any questions, but feel free to just jump in at any point in time if you have any questions about anything we're talking about. But the first type of metrics we're going to be looking at that you can analyze to determine if something is undervalued or overvalued is project metrics. And the first of which is white paper strength. Now, white papers are a document that you can read that every project releases, and basically they're a document that outlines all these different elements of the project. What are the goals of the project? What's the technology that they're thinking about using? What is their product roadmap? How are they thinking about solving the problems that they're trying to solve, and different things like that. They're also going to lay out things like the supply generation and distribution scheme for the tokens or the coins, or at least they should. And this is why I say white paper strength, because not all white papers are created equal. So you're going to be looking at these white papers and trying to determine, do they have spelling errors? Are they, not organized in a fashion that you think is the way that they should be organized? Are they missing key information and key points that you think are critical to the project's success? And things like that. And this is kind of the starting point of all fundamental analysis in the crypto space, is reading that white paper and really understanding what is the problem that they're trying to solve. And do you think they're actually going to be able to solve it effectively and better than their competition? So that leads us into the second bullet point here, and that's the project team. Now, this is the team behind the project. So when you're looking at the team itself, these could be people from all around the world, but you're really looking for a few different key things about these people to determine if it's a good investment or not. The first of which is their experience in the industry that they are in. Do they have experience solving similar problems in this industry, whether it be the DeFi space or an insurance space or otherwise? Do they have experience solving that, or do they know people and are advised by official business advisors that are helping them that have experience in that space? That's another thing you can look to as well. And have they been involved with any sort of scams or questionable projects? This is an important one, because if you see that one of the key members of the team has been involved with a scam or a questionable project in their past, it might not be a smart investment at the time, given that this project could end up turning out to be have a similar outcome. And then the third one here is the depth and variety of the skills of the team. So this is really important as well, because if they're all very good computer programmers, but none of them are really good at community building, for instance. They might not be able to build a successful cryptocurrency project because a lot of that is built into its success. You need to build a successful community and large community. And so you need to be looking for depth and variety of skill sets across the project team that's telling you this might be a good investment. The third one here is competition. And this one is an important one as well, but it's important when you're looking at cryptocurrency assets that they're not the same as looking at traditional financial assets in other markets. And the reason is because they're not only competing against crypto projects that are similar to them, but they're also competing against other legacy solutions as well. So these could be traditional finance companies, these could be traditional insurance companies and things like that. So when you're looking at you're reading the white paper and you're analyzing their market that they're operating in, you need to think about, is this the company or the project rather that I believe is going to beat out not only these other cryptocurrency projects, but also the legacy solutions that exist as well. And then lastly, for project metrics, we have the tokenomics and the initial distribution of the tokens. And this is incredibly important because when you're thinking about the tokenomics, this is really a simple concept when you understand it. And that's, does the token actually have utility? Like, is there actual use cases for the token? And is there an economic model and mechanism behind the token that's going to drive the value of it over the monetary value of the cryptocurrency up over time? So what does that mean? That means, are they using something like a scarcity model where they're going to be systematically burning some of the tokens over the course of its existence, and basically reducing the supply over time? Systematically, it's guaranteed they're going to be reducing the supply over time based on a number of factors. So if they're burning those tokens and the supply is going down, if the demand continues to go up when the supply goes down, the price is going to go up. So you need to look for things like intelligent incentive mechanisms and different tokenomic models that you believe in are going to work and drive the monetary value of the asset up over time. And then the other thing in line with tokenomics is the initial distribution. And this is, are a lot of these tokens held by a few people in the community, or is it actually a decentralized network in the fact that the tokens are pretty equitably distributed across the entire network of people that are involved in this project? You want to look for those types of projects where the tokens are distributed amongst a lot of different people, because if they're distributed, or if they're centralized rather, those people have a lot of power in that ecosystem. If they change their mind on the project and decide, I don't really believe in Ethereum anymore, Ethereum's a very decentralized project, so it's not a really good example. But if they were, looking at a different cryptocurrency and they were saying, I don't really believe in Feathercoin anymore, for instance, they could say, all right, well, I'm going to sell my shares. But if they own 60% of the shares, 60% of the tokens, they're going to cause the price to go down significantly. So you want to make sure that the distribution of the tokens are you want to look for distribution that is equitable across the different members of the community. So the second one here is financial metrics. So this, and this presentation, by the way, these are not all of the financial metrics or project metrics or on-chain metrics that are important to look at for fundamental analysis. If you guys want to learn more about it and you want to, hear about different metrics as well, like other additional metrics outside of these are a great starting point, and these are like fundamental ones that you need to understand. And then you can join something like our Telegram channel and ask questions to the community about other metrics that you can look at as well. But starting off here with these financial metrics, the first one is market cap. So this one is going to be really just taking the circulating token supply, so how many tokens are in the ecosystem, and multiplying that by the current price of the tokens. And that's giving you what we would consider the network value. So this would be essentially the cost of trying to purchase all the tokens that are in circulation. So right now, Bitcoin's market cap, I think, is still over $1 trillion. So that makes their network value over $1 trillion. So for you to buy all the Bitcoin in existence, you would have to spend over $1 trillion. So when you're looking at market cap, there's a few different ways to approach it. You need to be thinking about, like, is this a small cap project, like a small market cap project, or a large cap project? And how do you think about small versus large cap projects? If you think about small cap projects, one of the ways you can think about it is there's a lot of growth potential there because they're relatively small. If you look at large cap projects, another way of looking at small versus large cap is the large cap ones have a significant, probability that they'll continue to appreciate in value over time because they have network effects. They've already accrued so many people into their ecosystem and investors and users that for them to, they're kind of like too big to fail. Every person they add is just making them more valuable. It's kind of like Facebook today in that sense. Like that would be an example of like a large cap project. You can think of like an example of this in the cryptocurrency ecosystem could be something like Ethereum. And this is something people talk about. They're never going to lose because they have these network effects. So that's two different ways you can look at small versus large cap projects. But all of these metrics that we're talking about, you have to use them in conjunction with each other. So if you just looked at market cap, for instance, and said, oh, it's a small cap project, I'm going to invest in it because it's clearly undervalued. That might not necessarily be the case. So it's useful to use these different metrics and look at different metrics in conjunction with each other to make an informed decision. The second metric here is liquidity. And this is really just a measure of how easily the asset itself can be bought or sold. So if something is liquid, it means that they're easy to sell them. The asset is easy to sell at the current trading price. So an example of a liquid asset would be Bitcoin. If you wanted to go onto a Bitcoin market right now and sell your Bitcoin, there would be a buyer right there ready to buy your Bitcoin at the current price because there's a lot of buyers and sellers in that market. Conversely, an illiquid asset is one in which there are not many buyers and sellers. So it'll be difficult for you if you're a seller of that asset. Like if you bought a token and then later on it's still an illiquid asset and you want to sell it, you might have to lower your asking price to reach the next available buyer that's willing to purchase it. So if you wanted to sell all your shares and let's say the current price was $100, but it was an illiquid asset, you might have to sell some shares down at $90 because that's where the next available buyer is. So you want to have liquid assets that are, where you can sell your assets, you sell your crypto to the closest available buyer with having minimal loss of value, minimal loss of monetary value that you've accrued by holding that asset over time. And the liquidity also tells you what is the market interest for this asset. So something like Bitcoin, that because it's a liquid asset, what that's telling you is there's a lot of people that are interested in buying and selling this asset. So there's a lot of interest in it. So you can use that in your mental frameworks when you're doing your fundamental analysis to determine, is this a good investment? There's a lot of people interested in it now. Is it going to continue to be the case in the future? And the reason for that is because liquidity and some of these metrics, they change over time. So when you're getting involved into a cryptocurrency project initially, it might be very low liquidity because not many people know about it yet. So that's why I started with project metrics, because that's kind of the flow of fundamental analysis I think is the smart way of going about it. We're going to be starting with looking at project metrics like the white paper, the team, the competition, and fundamentally believing that that idea and that project and that team is good enough to increase things like the liquidity and the financial metrics over time. So then you'll be able to sell your shares later at the price that you want to sell them at. And in line with liquidity, you can also look at something like volume, which is how much money has been traded in that asset over a given time period. So if you're looking at 24-hour volume, for instance, what that's telling you is it's very simple. It's just telling you how much of that asset has been traded on that exchange over that last day. So if we're looking at Bitcoin, for instance, and we saw a 24-hour trading volume of 15,000 Bitcoin on Coinbase, what that's telling us is over the last 24 hours, there has been 15,000 Bitcoin that has been bought or sold on Coinbase. So the higher the volume is, the more liquidity there is because there's more people trading it. There's more people buying and selling it. So you want to look for things that have high volume if you're looking for something that is going to be liquid. So, but like I said, if you're finding a project early on, it might not have a lot of volume, and that's good because that's telling you that not many people know about it just yet. So you might be able to get a good price. So that's something to keep in mind when you're doing that analysis. The third set of metrics here is on-chain metrics. Now, these metrics are where you're looking at the actual blockchain data itself. So the blockchain that a project sits on has different metrics associated with it. And if you look at those, you can really understand what is the actual usage of this blockchain and of this project. So the first of those is the transaction count. Now, this is the number of transactions that's occurred on the blockchain. So it's a very simple metric to look at. It's just the total number of transactions over a given period of time, but it's telling you a very important thing, and that's how many, what is the actual usage of this blockchain? Are a lot of people using it, or are not many people using it? And like I said, as we talked about in the previous slide in financial metrics, when you're looking at these early projects, potentially, they might not have a significant amount of transactions or other, things like active addresses and fees paid yet. But over time, if you make an investment in them, you need to see these things trending upwards. So if you get into something early based on things like project metrics, you want to look at on-chain metrics as you're involved in that investment to see those things start to creep up. More people transacting on the blockchain, and things like active addresses, which is the number of people transacting on the blockchain. So how many people on a regular basis are using that chain? So there's a couple different ways to quantify active addresses. And just for context, one of the ways is to count both the sender and the receiver of each transaction over a set period of time. And another way is to count the total number of unique addresses. Now, it's not that important to know that information, but some of the resources that you'll see quantify it in different ways. So it's just important to understand that, because if you look at one page and it tells you one thing, and you look at another and it tells you another thing, that is why, because they're probably using one approach versus another. So when you're looking at active addresses, once again, a higher number of active addresses is telling you that there's a significant amount of usage and people are starting to actually get engaged with this platform. So that is, like I said, if you get in early, you want to see that starting to creep up. Active addresses should be increasing over time as more and more people get added to the ecosystem. And then the last one here for on-chain metrics, I'm just going to get a drink of water quick. Is fees paid. So the fees paid, you can think of this like an auction. This is just signifying what is the demand for the block space. So is there a high amount of demand for this blockchain? Now, think of it like at an auction, people are bidding to try and win whatever the item is. So on a blockchain, if you and I, for instance, are both trying to get our money off of an exchange, and I'm willing to pay the blockchain $1 in fees to get my transaction to be processed by the blockchain, and you're willing to pay $2 to get your transaction processed on the blockchain at the same exact time, like we both put our transactions in and submit them at the same time, yours will get processed before mine because you're willing to pay a higher fee. So you can look at fees paid to tell you if people are willing to pay a high fee to transact on a blockchain, there's a lot of demand for that blockchain. So an example of this is Ethereum. So Ethereum right now has very high fees, and that's because they're involved in the DeFi ecosystem, the decentralized finance ecosystem. So a lot of projects are built on Ethereum's blockchain, but you have to pay fees since you're transacting on the Ethereum blockchain in ETH. So the cost of the fees is increasing as the demand for these DeFi projects increases. So that's where you can kind of start to look and trace back and see, okay, the fees are increasing significantly. So there's a high demand for Ethereum's blockchain. So you might want to make an investment into ETH, for instance, or the actual DeFi projects themselves, if you look at the fees being paid to transact on certain applications on the blockchains themselves. Does anyone have any questions about on-chain metrics, financial metrics, or project metrics at this point? Feel free at any point, guys, as I keep going here, to ask me any questions you have. So I have a few closing remarks here in terms of fundamental analysis. The first one is, like I said throughout this presentation, one single metric is not going to tell you the entire story. If you read just the white paper and you stop there, you're stopping a bit short, in my opinion. You need to, it's wise to look at a bunch of different metrics to take a holistic approach and see things from a better vantage point. The second thing is, when you're doing fundamental analysis, you want to be looking where others are not looking. So doing fundamental analysis entails trying to search for these undervalued projects where you can reap outsized returns. So the outsized returns come from projects where the majority of people either have not heard about them or are not investing in them because they don't believe in them for one reason or another. So you have to take kind of a contrarian bet, meaning that you're betting against the majority when you're doing fundamental analysis to reap some of those outsized returns. So you look for websites that other people aren't looking at, or you talk to different people and you do different things like that to try and uncover some of these undervalued projects. And then next we have the idea that's an incredibly important idea, which is that cryptocurrency has fundamentally changed retail investors' ability to become wealthy. And why do I say that? Because in cryptocurrency, you can have a stake, you can buy some of these tokens in these projects early on in their life cycle before they become big, without having to have insider knowledge, know people specifically, things like that in the traditional financial world is very prominent. I mean, to be an early investor in Facebook or Google, for instance, you had to know someone, you had to get in early through the IPO or things like that. And, a lot of retail investors did not have that opportunity. But crypto changes that with decentralization and allows anyone with an internet connection to get involved in these projects early on. And that is incredibly important and valuable and innovative. It's game changing. Anyone that wants to can invest in potentially the next Facebook, the next Google, without needing to know anyone, without needing to be connected, without having a certain amount of money and being an accredited investor or anything like that. So that's amazing. And so doing fundamental analysis allows you to find those future Facebooks, those future Googles, and reap the financial benefits of that. And then lastly, I wanted to talk briefly just about the NVT ratio here. This is just one last quick bit of goodness before I send you guys off in terms of fundamental analysis, where you're taking the network value or the market cap, like we talked about, which is the circulating supply. We'll go back a couple here. The circulating token supply times the current price. So that gives you your market cap, and then that's divided by the daily US dollar volume transmitted through the blockchain. So this is kind of similar to the PE ratio in equity markets, where you're comparing the price per share of a share to the earnings per share. In crypto, what the NVT ratio is basically telling you is, if it's high, is that the network valuation, the network itself, the market cap or the price, you can think of it as, is outstripping the actual value being transmitted on the blockchain. So the actual usage, the actual blockchain, the transactions that are happening on it are not consistent with the price. So this could tell you, if it's high, that the price is, the asset is potentially overvalued. So it's a very quick way to look, kind of gauge that. as an investor. And these ratios and these different metrics that we've talked about, they're calculated for you. So you don't have to like go in and manually like calculate these on your iPhone or on your computer or something. They're all calculated, and there's different resources available to you that we're going to talk about here. So 3 of the resources that are available to you. The first one is CoinGecko. This is one that I really like, and I'm going to send all of these resources that we talk about in the email with the recording of this presentation to all the participants that are in this event now. So don't worry about like writing down this long URL or anything like that. I'll send it directly to you. But CoinGecko is really useful at looking at like price information, website data, market data, market cap, different things like that. It's free. You can use it using that link. The second one is Coinmetrics. So this is another great one for fundamental analysis. And they just updated their user interface. So it's like a lot more clean, and it's free as well. And so you can compare. Coinmetrics is nice because you can compare different metrics for different cryptocurrencies on the same chart and kind of see exactly what you're dealing with there. And then the last one here is Binance Project Reports. So this one is also really useful for conducting financial analysis, but also fundamental analysis on different cryptocurrency projects. And what the research arm of Binance does, which if you're not familiar with Binance, it's the largest cryptocurrency in the world by volume. They actually compile and write these lengthy but useful research reports on different cryptocurrency projects that you can use to make informed investment decisions as well. And then last but not least here, I wanted to point you towards some of the community resources if you'd like to get more involved in the Leutheria community. First of which is our automated crypto trading and investing software. So we're planning on releasing this actually relatively soon here. And this will allow you to save time and money by trading and investing in crypto, and streamline that process by allowing you to create a trading or investing strategy, back test it against historical price data to forecast the potential return on investment, and then take that strategy and apply it to different cryptocurrencies, where you will then be able to automatically generate buy and sell signals for yourself based on that strategy. So then you'll go into the exchange and you'll just buy when it tells you to buy and sell when it tells you to sell, and generate a profit. So it saves you a ton of time. I'm personally going to be using it for a ton of my cryptocurrency trades and investments, and you can become an early user of that by using that link there. And I'll, like I said, include that in the email. The second thing is our monthly newsletter. So this is where we wrap up, or kind of recap rather, all of the interesting things that have went on in Leutheria over the course of the month, and also highlight any of the important and new and valuable blogs, articles, videos, and projects that we're looking at investing in, podcasts, things like that, that we found for that month. And we send it to you. It's one quick short email. You can subscribe to that using that link as well. And then last but not least is our global Telegram channel. We've been adding new members to this for almost every day for the past several weeks now. We post a ton of really interesting information in there. The community has been really involved, asking great questions. I post like different trading ideas that I have in different projects on there, walk through like what I'm doing, taking profits, putting my stop loss in different places. I have different, like we post a lot of news articles in there. We talk a lot about different projects and things like that. And the other thing with that is we're actually just starting to do something new tomorrow, where we're doing a live audio chat on there, where I'm going to be having one of my friends, Greg, come on, who works at a crypto company. We're going to be talking about a ton of different crypto concepts, and we're going to be doing this live, where you guys can listen in live and pose different questions to us and ask us different things in that live chat. We're going to be recording that, so it's available for people in the Telegram channel if they're not able to attend. We'll be doing that tomorrow evening. So that is all I got for you guys in terms of this presentation. Thanks for watching the recording of our live fundamental analysis event. If you'd like to attend future educational events that we host on a variety of topics relating to Bitcoin, cryptocurrency, blockchain technology, and much more, you can do so using the link in the description below. You can also subscribe to our YouTube channel for future educational content, and we'll post all of the links for everything we talked about in the presentation in the description below. And until next time, onward and upward.